You heard the comments, but I would argue that we heard Mr. Bullitt's comments before. Does it change your view of what's happening here?
Look, I would like to see growth from productivity rather than growth through building of inventories and other areas that we can see that.
Right.
But look, what's going on right now, as of last week, has really changed some of our investment philosophy. Near term, we think that there are some real risks in the market, specifically around technology. When you cut the head off the snake of Huawei, there's going to be a lot of ripple effects. I think we're beginning to see some of those initially in semiconductors, but I think it's going to be much broader. And so we're pretty cautious right now in the markets.
Kathryn, you as cautious, given the news out of Lowe's. We had Home Depot yesterday. I don't know how that's factoring into your thought process.
I'll be the buyer on Chris's selling position. I am constructive. I think that opportunities are arising, especially when the markets are pricing in trade war taking down the U.S. economy, or Bullard's comments, or the collapse in Federal Reserve credibility. All of the above, I think, provide opportunities. I do think this trade impasse is temporary in nature. I could be wrong. Timing is, who knows what's going to happen in terms of timing. But incentives are definitely aligned for both to come to an agreement. And I would see opportunities arising in those names that are most directly impacted, which are tech, which are industrials at this moment.
So you're buying tech right now. What are you buying, for example?
So I like the broad tech space. I mean, if we do get an escalation of trade tensions, then those names that have heretofore been unaffected will take a leg down. And if, in fact, this impasse is temporary in nature, if Huawei and President Trump's escalation with regard to Huawei is a negotiating tactic, which I think we all kind of know the president's playbook, right? I mean, it more likely than not is. Then I would take an additional look to those sectors that are the most adversely impacted, because they haven't been affected by tariffs yet, which are tech. And secondly, I would say in financials as well as industrials.
Chris, you think this is like the antithesis of what you're thinking right now?
Well,
totally.
So what I'm saying is we've been raising our cash position so we can deploy when those corrections come.
But hold on. But Kathryn's effectively saying that there either right now is an opportunity, or maybe even a greater opportunity as this trade war tension continues. And are you suggesting that you're going to try to take advantage of that because you also agree with her that this is a temporary situation?
I think it is something near term that we need to be concerned with. The question is, do you have the cash to deploy when those opportunities arise? And I think that's what we've been preparing for.
What's the flashing sign? Kathryn, am I right? You're saying this is a flashing sign, that it's arrived. The moment's arrived. Chris, I need to know what the flashing sign looks for you.
Well, I think you see the whole reset in a lot of earnings already from a lot of semiconductor companies. I'd like to get deeper into the summer because, again, I don't think we know the full impact of cutting off Huawei, although we've now extended that. I think that could still come in. It is a trade negotiation. But as companies plan, they do pull back. There's greater volatility. You should be paid for that greater volatility, and that would
what about industrial companies or transportation companies that historically that are getting hit by some of this these trade issues and other issues? I'm thinking of the Boeings of the world.
So tariffs are different than what I'm talking about on Huawei, which I think is much more significant. The tariffs companies can deal with. It just takes time. Not all of them can move out of China, but the companies we're talking to have already been doing that over the last 6 to 9 months. They are preparing. But my greater concern is really around Huawei and what are the ramifications
back? Where do you think they're moving, by the way, just so we're clear?
They're moving to Thailand. They're moving to Vietnam, to the other areas that won't be tariffed from that perspective, but are close enough to the supply chain of other components.
Some of our viewers got very upset yesterday when I made the point they weren't moving back to the United States. Kathryn, are you in the same boat on some of these tariffed companies, I guess we'll call them now?
I think we have to be careful about overestimating the impact of what I think are temporary tariffs with regard to both economic impact and inflationary impact. You hear a lot of this in the media about the negative impact on the U.S. economy, throwing us into perhaps recession or global recession. When you really look at the numbers, when we put tariffs on on Chinese imports, which are a fraction, it's a minuscule fraction, our exports to China, of the U.S. GDP, the real impact, Joe, is of course on what we import from China, which is more than $500 billion. So if you up that to 25%, which we're at now, to 40% of the tariffs that,
right.
or 40% of the imports that we get from China, the impact on inflation is 0.22 points. So we're talking of a minuscule, and inflation's at 1.5%. So inflationary impact is muted.
Right.
If the jobs came back here, that would be a bonus.
It would be a bonus.
But that's not why we're doing it. We're doing it to hurt China. I mean, and to try to.
Well, we're doing it to improve the terms of trade with China, right?
And I'm telling you, watching this interview last night, I'm not optimistic. Right. This guy was like,
But Kathryn,
he was like Baghdad Bob, and he said that the United States, we had settled on what we were going to do, and the United States kept changing things overnight. And Huawei is
right.
we would the stuff he was passing off as fact. If I were negotiating and people were saying this to me, I get so frustrated I'd walk away.
Kathryn, can I just ask you though, if things are as great as you think they are, why are things like utilities and some of the retail staples rallying?
I missed the first part of the question, but what I will add to the point is that Huawei does have an Achilles heel. The New York Times had a great piece on this just yesterday. China imports a lot of these computer chips. They are in a disadvantageous position in this trade negotiation on multiple fronts. So look, I think President Trump is playing his hand. We can debate whether he's overplaying it, but certainly what we're hearing from both sides is an attempt to get the best deal possible. And if in fact I'm right, and China has, I would contend, a lot more to lose from an elongated trade standoff, then we are more likely than not, especially with elections coming in 2020 on the U.S. front. The president doesn't want to see, the Fed's third mandate, which is definitively financial markets drop. He doesn't want to see inflation pick up. Incentives are aligned to come to a deal.